Hello, good morning, good afternoon, and good night, depending on where you are. Welcome to our bi weekly live social video that focuses on regulations and policy. I'm Jen Sanasie here with my co host partner at Paul Hastings, Renato Mariotti. Renato, what's up?
I'm doing well. Boy, a lot has happened. It's definitely been a big change since our last live stream together.
Well, every time we meet, a lot has happened. It feels like the opposite of the regulation and policy conversations we had prior to this election run. It feels like some movement is happening, conversations are happening, and today we're talking all about prediction markets. And I feel like on every single show we do, we talk about what Poly Market is saying when it comes to Harris's chances of winning the upcoming election and Trump's. And so I have to tell our audience where it is. Just before the show, I checked, and Poly Market bettors have Kamala Harris at a 54% chance of winning the US election in November and Trump at 44%. I'm going to leave that there, but Renato, I want to get your opinion on prediction markets and their role in the elections this year.
Well, it's very interesting, right? And we're starting to see the growth of prediction markets. They've been around for quite a long time. There is a prediction market that famously started many years ago called the Iowa electronic markets, which is essentially had futures contracts. It was by, I believe, the University of Iowa. It was by an educational institution. They had written a letter to the CFTC saying, "Look, we're going to have these prediction markets trading real money for educational purposes. Is this okay?" And the CFTC said, "We're not going to take action against you." And so they've existed, but they're not popular. They don't capture the popular attention. There's not millions of dollars changing hands potentially, based on what's going on there. And prediction markets have gotten increasingly popular, and of course they're important in this election cycle. I mean, you're demonstrating, Jen, how close the election is, and I believe there's been a lot of volatility, right? I mean, at one point
Mm-hmm.
Trump was up over 70%, I think,
Yeah.
in Paul's market, right? So there's definitely a lot of change there. And it's interesting because one thing that you and I have talked about, and I think last time we had Vivek on discussing this, is, does the crypto space, the crypto industry, do they have a stake one way and the other regarding who wins? And I think there's been some movement
Mm-hmm.
in that because we've had recently this crypto for Harris conversation where
Mm-hmm.
the Senate Majority Leader Chuck Schumer came on and said we support bipartisan legislation to regulate crypto in a rational way. Mark Cuban and others were on that. It seems like we're now at a spot where maybe crypto doesn't have as much at stake, but for other industries, it can matter a lot what the outcome of the election is.
I think that I froze there,
I
but I
think
did hear
Jen
what
may
you
have
said, Renato.
frozen.
I think I did, but I think I'm back now, and I did hear what you said, and I want to talk about some comments before we bring our guest in by Chuck Schumer. He said that it's very possible we get some crypto regulation this year. A lot of the folks I've talked to in the interviews I do at CoinDesk have said it's not really possible anymore with the election coming up in November. What did you make of those comments? Do you think that we could see some legislation this year?
I think he's going to take some action to push things forward. I agree that it's unlikely that it's all going to happen. You would also require President Biden signing that into law. You need both houses of Congress to make that work. But I think what's going to happen is Schumer on his end is going to push things forward to some extent and at least show that there is bipartisan agreement so that crypto is really not a partisan issue. And I think that's interesting and it's important. So, one thing that we're going to be talking today about prediction markets. One thing that's going on right now, Jen, is that the CFTC is sort of considering a sort of blanket prohibition on prediction markets, where they just say political prediction markets are not going to be permitted, and that's drawing a lot of disagreement from folks in the industry. I know there was comment letters from Coinbase, from Gemini, Crypto.com, and others. who have all come out and said this is overstepping the CFTC's authority, because the CFTC is tasked with essentially operating under a law called the Commodity Exchange Act, which sets a procedure for the CFTC to consider various products that might be regulated by them. And for this type of product, what they would have to do is consider whether or not it is gaming or another category that would give them permission to prohibit the product, and then they would have to decide that is not in the public interest for that particular product to go forward. Let's say a poly market contract, for example. But nonetheless, what they're essentially doing is they're just sidestepping that usual process and just saying it's a categorical matter, we're not allowing it. And that I think has pluses and minuses. It's definitely going to have a potential impact on all sorts of folks, not just Polymarket, but others. That's why I think you're seeing the widespread interest and comment. Others who may very much want to introduce tokens that would, potentially allow companies to hedge risk in
Mhm.
relation to, political outcomes.
All right, well, let's get into it. For those of you who have just joined this show, we meet right here every second week and we talk about everything related to regulation and policy in the crypto sphere today. Like Renato just said, we are talking about prediction markets. The title of the show is Prediction Markets Under Fire. Is the CFTC going too far? Now, before we dive into the discussion, we want you to know that you can leave comments under this video, add questions, and we'll try to answer them if they are relevant. If you troll us, you are free to do that. It's a free world, but we may not read it. All right, let's introduce our guest now. Berkeley School of Law lecturer and former Coinbase head of policy, Hermine Wong, joins us to chat about this news. Hey, Hermine.
Hi, Jen. Hi, Renato. Good to see you both.
Good to see you too. We're talking about prediction markets. You heard Renato and I share our opinions. Curious to get your thoughts on the CFTC's notice of proposed rulemaking. What did you think when you read this?
That the CFTC is a tough spot, right? Like if we just think about this in terms of timing, we know that they put out that proposed rulemaking right before they knew that the Supreme Court was also going to come down with their Loper versus Raimondo decision. You guys may remember that. I know Renato certainly does, because this was the big case at the Supreme Court that overturned the Chevron doctrine, which afforded agency deference, right? So here they're pushing out this rulemaking right before that decision is going to come down. Everyone thought that it was going to get decided the way it did, so it did. But they're going to be in a tough spot because they are, as Renato said, using some of their discretionary authority here, meaning that they're trying to read what Congress said, but Congress didn't explicitly say no prediction markets, right? That's the rub. So they're trying now to use their agency authority to say, okay, these terms that Congress used, war, terrorism, those are the things that are definitely off the table. And gaming is part of that, is off the table. And now they're saying, like, within that gaming bucket, this is what we believe Congress wants us to do. And but they're in a tough spot because, one, Congress didn't say explicitly this kind of stuff. And two, they're going to find people on both sides of the aisle and both sides of the general ecosystem, beyond the crypto ecosystem, that are going to be pro and for whatever they do. And certainly that's borne itself out, where we've seen not just like pro regulation, anti-regulation interest, but like the NFL is opining on this kind of stuff, right? This is not going to have just a anti-crypto and a pro-crypto response.
Right, and I think I think you really set this up very well, and I think there's definitely two sides to this. We can look at sort of maybe what the CFTC's perspective is. Let's look from a more industry perspective now. I would just say, as a starting point, I alluded to a moment ago, there are some companies and individuals who actually need to hedge risk potentially related to a presidential election. For example, the Biden administration has a very aggressive view on antitrust. that might impact certain companies in a negative way or a positive way. And for them, being able to hedge the risk that comes with a potential change in administration could have a value for their business. It's not clear to me that that's necessarily gaming. It actually suggests to me that just like you might hedge risk related to currency or commodities, you might need to hedge risk related to a political administration. Why do you think the CFTC doesn't regard that as something that is a legitimate use of a prediction market?
You know, it's a great question, and one that I think goes back to what is the CFTC's core mission. And if we think back about the history of the CFTC, you know, we talk about commodities as it's like, yeah, that's what it is. But let's be clear, they started off as agricultural commodities, right? This is like wheat, grain, soy, pork bellies, orange juice concentrate kind of stuff, right? And the CFTC is regulated. Their oversight comes to the Senate Ag Committee, and so those are people who are very, very attuned as the senators, generally attuned with kind of farming practices and a lot of those farming industries. So I would say it's less that CFTC is not necessarily thinking that this is legitimate, as much as the CFTC, and you saw this in Chair Benham's own statement, they don't think that this is their area of expertise. So if it's not part of their core area of expertise, then should it belong on a CFTC regulated exchange, or should it belong elsewhere? And the problem is that there's no elsewhere to be, right? Like elsewhere means like offshore, elsewhere means at the state level, right? Like you leave things in that kind of lottery system that states oversee. Like we're not sure where elsewhere is, but at minimum, it seems like the CFTC is drawing the line like it's not going to be in our backyard. We're not going to be on the hook. We're not going to get dragged up to the Congress to be told what idiots we are.
Well, talk me through the process a little bit here, because this is the new proposed rule. I know there are processes to actually making this a rule that is now in place for prediction markets to follow in the United States. What happens from here? What needs to happen for this to go through?
We know that the CFTC is taking this whole comment period very seriously, and we know this because they extended the comment period. Generally, a rulemaking gets 60 days, and then they extended an additional 30 days to allow people to opine even more. Then they're going to have their staff take a look at all those comments, and the staff needs to respond to those comments in a final rulemaking. So they will probably change it a little bit, tweak it a little bit. Depending on how quickly they can get this out the door, it may change or may not happen at all, right? Because if there's a change in administration, for example, and Trump becomes the new president, Trump is going to appoint a new chair, and you don't love to have these midnight regulations. Midnight regulations are the ones where an outgoing administration just rushes a bunch of regulations to finalize it. Everyone feels like, oh, like that's not who we voted into office. We just voted that person out of office, right? They shouldn't be allowed to do that. So we don't love those as a matter of public interest. But I think that it's unlikely they're going to be able to rush that before the election happens, because there's so many comments that they have to respond to, so many comments that they have to read.
I'm curious what you think is animating the CFTC's move here. I mean, do you think that potentially they're concerned about money riding on an election outcome that could potentially give an incentive for people to try to influence the outcome of the election?
Nailed it on the head. Like that's exactly what
That's what we call a leading question, Renato.
Yeah, exactly. Thank you. Thanks. I guess I'm a hostile witness in this stage. So what happened is that we saw that in Chair Benham's statement. We also saw that in what a bunch of senators sent into the CFTC as a comment letter. It was, and Senator Warren was as a part of that list of people saying like, look, it creates perverse incentives when we already know that money corrupts our political system, right? There's like a belief generally, certainly among Democrats, that money corrupts the integrity of our elections. And then when you layer on top of that the ability for potential market manipulation to happen with a lot of big money, this seems to them just like on its surface a perfect storm of disaster, and they don't want anything to do with it. They're like, look, just ban it. There's like a bunch of things you're allowed to ban. This should definitely be one of them. And it's gotten to the point where there's a lot of money involved and a lot of people are involved with this, right? So it's not just the billionaires who are contributing to the super PACs who might be taking bets on this. It's like average Joe and Jane Schmo are also on these prediction markets. They're like, I think Harris, I think Biden, and I think about this, about these local elections. And I think, whether or not someone might break their elbow before they get on stage for something, right? There's like all these wonderful things that everyone can do now that I think concerns them.
Well, here's my question. We talk about Polymarket all the time. At the top of the show, we talked about what Polymarket bettors are putting Harris at and Trump at as their chances to win the election. But Polymarket's not actually available to people in the United States. Like, I can go on polymarket.com and read what people are doing, but I can't actually bet from sitting here in the United States. So talk to me a little bit about these proposed rules. Could they affect platforms like Polymarket, or will Polymarket just keep running the way it's running today?
It can definitely affect something like Polymarket, because you think about whether or not Polymarket wants access to the US customer base, right? So the idea is like, look, Polymarket, you could come and become a registered exchange on the CFTC place and then be offered if you don't do all the things that's making you money right now. Right? That's like, so like, it's like, yeah, they could come and then offer bets that US market doesn't want to take, right? It's like, so then they might, or they could stay offshore and continue doing this, but then they risk, some people who are US citizens VPNing onto their platform, making the bets, and then they're on the hook for knowingly, even if ignorantly but willfully kind of allowing US people to get on their platform.
What do you think? I'll ask this in a non-leading way. What do you think is motivating companies and in like the NFL, for example, to have an interest in this? What's the interest in non-political stakeholders in this sort of rulemaking?
Yeah, so we're thinking about this as a political issue, right? But for places like the NFL, what they really don't want is people throwing the game, right? Like this has happened before. This is like time, we've seen this over and over again. But then kind of perverse things that might happen, like my example, which dates me, is like, the Tanya Harding, Nancy Kerrigan disaster, right? Where if someone were to bet on whether or not someone wins an Olympic medal and they're willing to take someone's knee out for it, right? We create these kinds of perverse incentives. And so the NFL doesn't want anyone to certainly throw a game or bet against, like some physical therapist bets against their own team and then like, manipulate someone's ankle right before a game. Some, those kinds of things happening. And that's definitely part of these prediction markets right now. So like, we like to sit here and think about the Harris Trump stuff, but there's all sorts of dangerous things that could happen. And that's why other industry players are getting involved. What do you think?
I actually thought that they might have an interest both ways. I mean, they could also be interested potentially at some point in the future in having their own products their own tokens and so forth that could allow people the opportunity to take an interest in particular players or particular performances. Just like we do for elections. I mean, technically, just like election has outcomes, so do football games. But that would obviously, that would allow them potentially to have control over a gaming market that is generating tons of revenue, but isn't controlled by the NFL. But what do I know? I mean, that's just based on publicly available information. But that was my guess.
I want to turn now. There are some questions from our audience. They're asking for, I'm assuming, both of your thoughts, given your experience on Operation Chokepoint 2.0.
Ooh, Operation Chokepoint 2.0. So your audience knows enough, but like, I'm willing to just give like a 2-minute recap of Operation 2.0, which is the idea that the government secretly believes that there are certain industries that are not worth having banking rails. And so they find ways of debanking them. And whether or not there's the industries or the people in those industries, no one likes it, right? And Operation Chokepoint 1.0 was more targeted to gun manufacturers. And so we're seeing this with the crypto industry. So is this a version of that? Like, again, we are seeing other industries opining beyond the crypto industry, and I think that the having the crypto industry opining is well within the bounds of a bunch of industries opining. It's not clear to me that this is a 2.0 targeted kind of issue, the way we might have seen with some things that come out of the Office of the Comptroller of Currency, for example. But that's just one pundit's thoughts. Like one academic's thoughts. What do you think, Renato?
Yeah, I have a similar view. I mean, I think that it's understandable that people have those concerns, particularly after the current administration has taken a very aggressive stance towards the crypto space. Like, I can understand those concerns. I don't really think that they're well founded at this point, and I don't really see an Operation Choke Point 2.0 coming to be. So I actually think things are moving in a much more positive direction, which I think Jen, you and I had alluded to earlier when we were discussing it, which is a good thing. I mean, I think one thing I'm interested in, by the way, is your perspective. As somebody who's been in the SEC, who's been at Coinbase, I mean, that had to be quite an adjustment to go from the SEC to Coinbase. Bitter enemies at this point, but also, now you're at a law school. What is your perspective on the regulation by enforcement and sort of where this entire industry stands right now?
Yeah, I mean, regulation by enforcement just it sucks. And I don't, when I was at the agency, I worked pretty much exclusively on rulemaking, and rulemaking is a hard thing to do. It's hard because we talked earlier about what's the next step in this particular process. Rulemaking is 2-3 year process. It takes a long time because you're trying to find a one size fits all solution for a population that is not going to be one size fits all, right? So you're going to have someone hating you all the time. Regulation by enforcement, though, like means that no one's looking for a one size fits all solution, right? Here are the facts, here are the two players, and now everyone after the fact has to read the tea leaves of what happened because of that unique situation. And that's terrible. It's not great for the public interest. I will say that I personally believe it's going to be one of the perverse consequences of Loper versus Raimondo, right? Like, we're going to see agencies a little more gun shy about putting out regulations. And so we're going to see more regulation by enforcement. Having said that, what is my perspective of like SEC and crypto? It's at its like probably worst point that it could possibly be, and most of that I think is attributable less to the agency as much as to the chair occupying that particular position, the current chair. I think under a different chair, regardless of whether or not it's a Democratic or Republican regime, by the way, I think a different chair would make very different decisions from this chair, and I think that we can all just hope for that change there, and that would be true. Like, candidly, what it's true about crypto, it's also true about a bunch of other regulated industries, like that is not happy with this particular chair.
Yeah,
Yeah.
I think that. Sorry.
No, that's okay, Renato. I was just going to say we've heard folks from both the Republican side and the Democrat side say that Chair Gary Gensler should be replaced. It sounds like, from an industry perspective, Hermine, you're saying the same thing. Do you think that he should be replaced?
Yeah, I mean, not only should he be replaced just on like kind of like the way that we think about public servants doing a good job. Like, I think like that is we see that there's a ton of attrition at the SEC that hasn't happened before. We see that the agency, the morale there is much more depressed than before. And this is for an agency, just as like an operational matter. The people at the SEC make a ton more money than other agencies, right? So generally you think of morale at that agency being higher because as government civil servants, they're on a different pay scale that pays them a lot more. And the fact that we're seeing morale that low at an agency that pays that well, there's something bad going on. And something bad like that, it starts at the top generally.
Yeah, I have to say, I'm hopeful that there's going to be change regardless of which administration takes takes office, next year, whether it's going to be Harris or Trump. But it's interesting because I think that Gary was at a spot where he could have, I think, really changed the trajectory of this space. I mean, if he had taken a different approach, maybe the SEC would have promulgated regulations. Maybe a regulatory framework could have come out that would have had either the SEC playing a leading role or sharing, I would say, authority over the space with the CFTC. And I think what we're going to end up now is a legislative solution that probably is going to give the CFTC the leading role here, if not the exclusive role of regulating this, and really a very different direction than what could have come from, I'd say, from rulemaking. So it's interesting how one person can make such an impact in the future of an entire industry.
Yeah, 100%. And if I can just tack on something that we saw before Gensler took place was uh, Commissioner Harris proposing kind of a sandbox regime. So this idea that this SEC and CFTC could have, this is a really real possibility. This isn't just like pie in the sky hopes and dreams, right? There could have been some sort of regulatory sandbox for a period. We get a lot more data about how a regulated crypto regime works, and then we tweak it at the legislative phase. Now this unfortunate position that we're going to be in where it requires this legislation without maybe sufficient data about how this industry will react to regulation is going to be, I think, unfortunate, because then we're going to just have kind of churn in this legislative regulatory process for a lot longer.
You said Commissioner Harris there. I think you meant Commissioner Purse.
Commissioner Purse.
Yeah.
Hester Purse. So sorry.
Just wanted to correct that for anyone
thank you.
watching. Yeah, Renato and I talked to Commissioner Purse at Consensus about that sandbox framework. And as someone who reports on the industry, it's been so disheartening for me to continuously talk about this and report on Purse's efforts to bring that regulatory sandbox to life, and it just hasn't been able to come to fruition. Renato and I have talked about this a lot, and Hermine, I want to get your perspective here. Do you think the U.S. can catch up to some other jurisdictions who have clear regulatory frameworks and are attracting talent and business away from the U.S. right now?
Yeah, I do. I think that window is closing fast. But one of the great things is that for the US, at least for right now, continues to be that a lot of the builders are still in the US, right? A lot of the people who are most interested are still in the US. Internet, just as a practical matter, internet adoption is really, really high here as opposed to some other jurisdictions in this world. So there's some great parts of this ecosystem that is hard to move out of this country, but that doesn't mean that it can't. The very fact that it's based on the internet means that it can go anywhere that there is internet access. And so I think that the window is closing, the market is still here, but I'm not the first one to say that, and I won't be the last. But I think the window will close. I think that the timeline is probably more around 5 years. It's not, I don't believe it's in the next year or even 2 years, but I do think that if in 5 years time the US can't get its game in order, it'll probably be very, very hard to catch up.
I hope it could get its game in order in 5 years. 5 years seems like a really long time.
It's like dog years in crypto world, right? So you will have seen companies come and go within that period in crypto land, but the tenure of a senator is it's 6 years, right? That's one term for a senator. I'm saying it'll be less than one term of a senator. In the government process scheme of things, it's worthy of remembering. I tell my students this sometimes, is when an agency plans its budget, it starts talking about its budgets on a 10-year basis, right? Like this is like it doesn't have OKRs on like a quarterly cycle the way you do when you're at a private company. You show metrics on a budget cycle.
Yeah, it's interesting the difference in speed between government and the private industry, particularly this space. But I will say that I'm hopeful as well. I mean, I think we really are getting to a spot where, we talked before you joined us, before we brought you in, about how in a recent Crypto for Harris event, you had Senator Majority Leader Schumer echoing some of the concerns you raised and suggesting that there was an urgency on his part to ensure that this industry does not relocate overseas. So I think the fact that we're getting bipartisan movement there really indicates to me that we're going to have a solution well before 5 years, which is a great thing.
I just hope that the Democratic Party starts saying things other than we support innovation with guardrails. Like, I'd like to know what kind of meat is on those bones, right? Like, I mean, I think it's totally innocuous to say I support innovation with guardrails. I mean, I say that to my kid too, right? Like it doesn't matter. Like like I hope that the Democrats start saying something more than that, because they could just regulate it out of existence and still be true to that statement of innovation with guardrails.
Hermine, for people who are listening to what both parties are saying, just on the back of that comment, what should people be listening for when it comes to policy and a party's stance on crypto?
So I think that people should be seeing that the any politician is actually becoming savvy on the tech, right? So like what do they see as being the actual potential? Do they see this improvement in digital privacy? Do they see improvements in a creator economy that rewards individuals more than the big tech incumbents? Do they see that there are opportunities for accessibility of the financial market to traditionally marginalized communities, right? Like are they encouraging those kinds of innovations? Is that what they're seeing as the potential? Or are they going to create regulatory moats for the big banks to get into blockchain and then just regulate everyone else out of existence? Like that's what I want to see. That's personally, and I think that that's what we should hope to see, as opposed to, again, innovation with guardrails could very well mean only big banks get to do it and everyone else can't.
Yeah, one point I've made before is I do think that at this stage, having any regulatory framework is better than nothing, because this is where we're at right now. Do you have that same view, or are you very concerned about sort of how good a particular piece of legislation is?
Uh, so I'm not of the belief that like I'm not of the belief that we need to be perfect the first time around, right? Like perfection always the enemy of the good. But I do think that knowing who would benefit from any particular legislation and whether or not it's going to be a lopsided beneficiary is like that I do think is a problem. So I'd like to see that the people who would support any legislation are big tech. They find it's like big bank incumbents, perfectly fine, like they're going to have to support something. But I would also hope that we would see thing from the general community members as well supporting that, and also some of those issues that I flagged as like, are we actually increasing accessibility to our financial markets from margin? Like you'd want to see that there's some sort of ability there. Are we actually seeing increases in digital privacy? Are we seeing increases in kind of like this creator economy that we believe that this industry has a potential for? Like those are the kinds of things I would also like to see. And I think that if we don't see that, and we see only things that big banks can comply with, like I personally would not be for that regulatory framework.
Hermine, I got to ask you, recently Ripple's lawsuit with the SEC came to an end. Is there any precedent that's being set right now in these cases that are going to court that you think are going to carry forward and impact the legislation making process, the rulemaking process?
The one thing I'll say about this legislation, like the litigation, sorry, is the amount of money that's been spent on it is crazy money, right? This is crazy money we're talking about. So what concerns me is that any precedent that's being set is set by people who can afford that kind of litigation. And what we haven't seen, like we're not going to see, unfortunately, without new legislation, the kinds of precedent that would be really great for the general masses of this crypto ecosystem. And what I mean is, like, look, we've seen a ton of settlements come down from both the SEC and CFTC by the very fact that, you know, startups can't afford multi-million-dollar defense litigation. And so I'm a little worried about it. I do think that it's very valuable for an agency that has overstepped its authority to be challenged on that. And I'm grateful, just as a public policy matter, that a lot of these companies have fought this good fight. But there's a lot of fights that aren't being fought. And if our only concern is the ones that the industry wins when we're drafting legislation, then that's just not good enough.
You mentioned a moment ago being concerned in a regulatory framework who the winners and losers are. Are you concerned when you look at Fit 21 or about a particular group or benefiting or not benefiting from the current legislation that's been proposed?
Yeah, so with Fit 21, my concern would be that if you're going to really focus on a world of DeFi and a world of self-custody and a world of people kind of owning their own digital wallets and their digital identities, that's not what Fit 21 is designed for, right? Fit 21 is more squarely of how do we get this crypto ecosystem into a centralized ecosystem, and that's totally fine when we're talking about the people who have custodial relationships, owe a fiduciary duty to their customers. Like, love that part. Fit 21, great for that aspect. But some of the inattention paid to the promise of the rest of this space, I think, makes it a very incomplete legislation. It's great that it found bipartisan support, I think, because again, that means that people are starting to pay attention. Members of Congress's staff is paying attention. They're paying attention enough to tell their member to vote for a piece of legislation. Voting for a piece of legislation often harder than voting against something, right? So the fact that you got that many people to vote for it meant that they had to understand some parts of it, and I think that's incredibly promising. I don't think Fit 21 personally is going to ever make it to any president's desk. I think that they're going to have different pieces of legislation, and I'm hoping that in whatever does finally get there, does a better job of addressing some of those other concerns of the ecosystem.
All right, Hermine, we have to leave it there. We are almost at the hour. I know it's always such a pleasure talking to you, Hermine Wong, lecturer at Berkeley School of Law. Thank you so much for joining us.
Thank you so much. This was so much fun.
And I'm Jen Sanasie. Thank you to my co-host, Renato Mariotti. We will be here same time, same place in 2 weeks. Thanks so much for watching.